I have a formula, gentlemen, and stocks have to be down, overreacted down, meaning down a lot, private bear market, to low valuations on solid fundamentals, although usually earnings misses, negative revision, because you don't get the down a lot without a hiccup. So you have to have the hiccup. And that's what I buy. And then when I sell, when they get fully valued or what I perceive to be overvalued, I then need that buy point, that buy formula to reinvest. And I've been selling a bunch of winners completely in the last 6 months. And I just haven't been able to find anything that fits the buy formula. And one of the buy formula parameters is price to sales ratios. And Robert doesn't do anything more than 1.5 to 2 times enterprise value to sales. And right now I'm selling stocks. My Arteris I totally sold at 6 to 8 times sales, and this got sold at 4 times sales. So I need these stocks to become buy candidates to drop 50, 60, 40%. And why would I hold a stock that I couldn't buy it back unless it went down 75%? So I had to sell. I'm forced to sell when that happens. So yeah, the cash is up to 30%. I could raise a lot more cash if I wanted to buy stocks I'll never get a chance to buy again, because they've done what I just said. They went from 2 to sales, some 2 times to 6 times sales, and maybe at 4 they bottom and then they go back to 6 or 8, or they grow sales 30% a year for 5 years. And I don't want to let go of that. So that's the process. That's the reason for the cash. It's the reason for the TAC sale, in addition to others. And the inability, I think in 6 months, I've mentioned 2 new names I bought in this show. One was a double, which was in test, and the other one was a spanker down 2/3, 50% to 2/3, and that was SimilarWeb. So they're the only 2 new names I have. I am circling one called CRH. It's an aggregates company. It came from Ireland, redomiciled in the U.S. It half the valuation of Vulcan Materials and Martin Marietta Materials. It's 10 times EBITDA versus 17. It's 16 times earnings versus 25 for the U.S. guys. And it's had a nice hiccup. Well, back in the early days of the show, I bought this and I pitched it. And I bought it in the low 60s, sold it in the mid 80s, and it went to 130 without me. So that was a screw up. But if it dips, another 10 to 15%, I'll probably go back into the position. So that's one that I'm circling. And I just wanted to give people an update. Telebio, which is my hernia patch company, I haven't forgotten about it. I had a big profit in it that I let turn into a reasonable loss, TELA. And I have hope that when they release earnings tonight after the close, there'll be some news that'll get the stock marching back upward, because it's a very cheap stock with the worst income statement and balance sheet I ever saw in my life because of the incompetence of the CEO. And I'm trying to get the CEO fired by talking to the chairman and the outside chairman of the board. So I will have more news on that when I do my next show. Finally, Ben, I sent a chart around to our chat, real-time chat, on the drawdowns. As you know, I do seasonality, cyclicality patterns, and all that, and I factor that into my decisions on the market and my gross exposures. And somebody posted a table on Twitter yesterday that I thought was interesting. It showed that midterm election years have bigger drawdowns on average, median and mean, in the mid-teens than every other part of the election year cycle, first, third, or fourth, and which they're all under 10%. So the median and means for the 6 other observations there would be 8, 9, 10%. Maybe there's one at 11 for a median or mean in one of the other years. So it's considerably north of all the other election years. But and then when you get this deep correction, the following year turns out to be a very good year. But the most interesting thing in the table was that the drawdowns are concentrated 75% in the second half of the year. Normal seasonality, drawdowns are concentrated in the second and third quarter of a year. So the fourth quarter in an election, in a midterm election year, is the most frequent bottom for a midterm election year drawdown. So I don't think this drawdown is over. I'm going to buy the dip, but the dip needs to be 15% or more, and it needs to happen in the third or fourth quarter of 2026. So that's my plan, and I'm sticking with it. I've got a lot of shows to do between now and then without a lot of things to talk about, people.
Man, that's chalk chart's done nothing for a while, huh?
Which one?
This QQQ.
Yeah.
Damn, just flat. Not making any money. Bakes, what do you think about that chart?
Well, I put this up because when I do shows with Steve Lamar, our other partner, he asks about this all the time, and I was struck. This looks a lot like the S&P too, by the way, but you have this. Bottom line is this 580.74 is a big level, and if that goes, you have a close below that, and I suspect that Besant is a chart reader too, and he probably says to Trump at some point, you got to get these stocks going again. And I think that's run its course. You see this low here at 582 on I guess that's Thursday. That's Friday. Here's Monday, yesterday, and Trump posts and makes it touch the 200-day moving average, but it closes at the low. And now here we are taking on water, and I think we're threatening this 580.74, and all the big components are really looking pretty bad. Nvidia is probably the best looking. It's the cleanest dirty shirt, as Johnny Cash would say. And Nvidia, Tesla's already joined to the downside. Microsoft's in a bear market, so I'm watching this 580.74 level. And PSQ is the short equivalent ETF that people can pull off the shelf, which is imperfect, but it's okay. But 580.74 on the Qs looks bad.
Yeah. It's a bit of an Adult Swim situation out there, boys. Any other charts you got for us, Bakes?
I have two that I'm circling, and I'm often accused of just being Momo and buying highs, and but this is really what I prefer to do if the market gives it to me. And this is a long-term chart of this is SARK. This shorts on a daily basis, so again, it's imperfect, but I made money in 22 because of this, and it shorts the Kathy Woods ARK Innovation Fund, ARKK. We've gone from 253 down to 27. Here we are at 3260. This is a base. It's almost the inverse of the Qs if you look at it. And if we take out 3480 on decent volume, I think we start climbing up, eating through this resistance and making some money. Tesla's her number one name, CRISPR's number two, and Circle is number three. And so I think, those names it's going to be really tough to make money in those names over the next year if I'm right. And I'm looking for 3480 to make it official. But this is starting to look promising. I'm going to go long SARK, which means I'm short ARKK.